Hi, everyone. Thank you for coming. My name is Martin Bruncko. I'm the founder and CEO of Schuman Financial. We are a MiCA compliant, French regulated Euro stablecoin issuer. Previously, I used to run Europe at Binance, and I also used to be in government as an innovation and deputy finance minister in Europe. So I'm here today to talk about a topic that I was worried the room would be completely empty because it's either so obvious or so crazy that I felt it almost required no explanation. But let me walk you through our argument why we have built Schuman Financial and why it's built on a premise that we are deeply convinced about, which is that the Euro stablecoins will, by definition, be a 100+ billion euro market cap very soon. So the argument, actually, let me walk you through the argument at the beginning, and then I will explain it in more detail. So the argument is very simple. We all believe that traditional finance is moving on chain. Now, if you look at traditional financial markets, the euro-denominated financial markets are about a third of the dollar-denominated markets. So this is a euro-denominated market is massive. So if you believe that the financial services are moving on chain, and if you believe that Europe will not dollarize in any near future, then you will inevitably have and end up with a euro stablecoin or a couple of euro stablecoins that will actually not be a 100 billion market. It probably will be a trillion euro plus market. So let me walk you through this argument now in more detail. I think all of us sitting here, we understand this, I think, quite deeply. I don't need to go through deep explanations here. But if you look at where the crypto market, crypto industry is today, it is now getting increasingly more and more mainstream, or in other words, the traditional financial markets are moving increasingly more into crypto and adopting DLT and blockchain technologies. This is just from a recent survey done by Fireblocks they were talking mainly to traditional financial service companies. Already around 50% of them are considering using or working on using stablecoins for payments. Their stablecoins are already settling $25 trillion a year. Or 25 trillion euros, rather, a year. So that's actually more than either Visa or Visa or MasterCard alone. You have the tokenization of real-world assets. Basically, securities also moving very fast. And based on different studies by really pretty renowned institutions, including traditional financial institutions like Standard Chartered, the estimates are that they are going to go into trillions or potentially tens of trillions within the next 5 to 10 years. So now look at the euro. Where does euro sit in this? So the euro, as I said, the euro-denominated financial markets, depending on the specific type of product, are roughly a third. So they're anywhere between 23 and 40+%. If you look at payments, actually, this is payments settled via SWIFT. It's more than the equivalent, the euro equivalent versus the dollar market is roughly 44%. So we're talking about a massive market. And I can assure you, euro is not going anywhere. There is zero chance that the EU will ditch the euro officially and move it, swap to the dollar. And there is also zero chance that even if this were to happen de facto, the European authorities would allow it. And actually, even if you look at MiCA, the MiCA is specifically designed to prohibit the use of any non-European pegged stablecoins for payments. I mean, it doesn't completely prohibit it, but there is a very small limit of daily transactions, which is, I believe, 200 million euros. And that's just a tiny fraction. That's actually 2 orders of magnitude less than the amount of payments that's already happening today in Europe in fiat. So there's no way euro is going to disappear we are here with the euro. Also, I'd like to add that, I don't know if any of you has seen FT yesterday, dollar has had the worst year in more than 40 years. It's actually, the value of dollar has declined by 10%. Given what the US administration is doing right now, well, they're being very efficient and effective at undermining the global role of the dollar. So I think this is now becoming more and more mainstream idea as well, that the role of the dollar in global finance is going to decline. I don't think anybody believes yet today that dollar is going to disappear or not be the #1 global currency 10 years from now, but I think it's just generally starting to be more and more accepted that dollar prominence will be much lower in 10 years than it is today. Now, if you actually have these financial services, traditional financial services on-chain, however, they will be denominated in a given currency, right? And we're now talking about euro specifically. So if you want to settle them, if you want to trade them, you actually need a tokenized version of that currency. I mean, in theory, you don't need to have a tokenized version. In theory, you can have a security, a bond on chain, and buy it, settle it with fiat. And it's doable, right? But it's kind of equivalent of using a traditional landline phone and a mobile, right? You can actually call someone from a landline phone, someone who has a mobile, but what you're able to do between each other is so much less than when both of you are calling from a mobile phone. And so this is kind of the equivalent of the need for a stablecoin or a tokenized version of the currency so that you can settle it, so that you can use it for settling transactions of financial services that are on-chain. Now, these are just some numbers of the volumes of currently euro. So I mean, if you were actually to just capture 0.1% of the daily target 2 settlements, basically we're talking almost 30 billion daily flow, 0.1%. Another example I actually like to use is FX on chain, or FX. If you take the dollar to euro currency pair, FX pair, the daily trading volume of that is roughly 5 times bigger than the trading volume of all the pairs on all the centralized crypto exchanges, of all the trading pairs on all the centralized crypto exchanges, right? And that's just one product. Arguably, it's the largest stratified product or largest stratified market, but it gives you a sense of size of how big these markets are and what's going to happen once they start to move on-chain, even partially. Now, so going back to why you need this, how you need this tokenized euro. I mean, in theory, there's 2 ways to tokenize a currency, or in practice as well. You can either have a CBDC or you can have a stablecoin. I don't think I need to explain to anyone in this room why stablecoins are a much better solution than CBDCs. The ECB is pushing very heavily, actually, a CBDC, but I can assure you, and also with my experience, having spent many a day or many a night in Brussels with the ECB leadership, actually, Madame Lagarde, who is now at the helm of ECB, used to be a colleague when she used to be French finance minister when I was there. So I know how these people think. I know how governments work. Trust me, governments in Europe are no more efficient than they are in US or any other country. There's no way there's going to be a functional CBDC that really works, let alone at a more of a retail level, let alone that fintechs and crypto savvy entrepreneurs will be happy to work with. There's no way it will be around here in the next 3 to 5 years. It will exist, but it just won't really be quite mainstream. And so we deeply believe that actually the future is really based on stablecoins. It's not obviously just us. If you also look at the traditional financial institutions, they're all experimenting, or many of them moving towards stablecoins. And it just doesn't make sense for them to start creating another stack really focused on CBDC. So it will have to be, or in reality, it will be about stablecoins. And let me maybe just end. So now you ask, okay, but you talk about euro stablecoins. It's basically a non-existent market, to be very honest, right? I mean, it's in the hundreds of millions as opposed to closer to 200 billion when it comes to the dollar-based stablecoin. So they are kind of a rounding error for now. The reason why the euro stablecoin haven't taken off until yet has to do with the core of my argument, which is that stablecoins right now are mainly used for crypto trading or crypto trading related purposes. Of course, some of them like USDC, even USDT, are also used for payments, particularly in emerging markets, but that's a very, very, very small fraction. So the real change will happen, again, really with regard to the traditional financial services. And the other reason why they haven't really taken off, because we actually didn't have quite a good euro stablecoin in place yet. And so to us, what does a great euro stablecoin means? It needs to be obviously European-based and regulated in Europe because of MiCA. Obviously, reserves need to be at tier, it need to be one-to-one, but they need to be really at tier one European banks. I mean, if you start to speak to even like a really highly respectable centralized exchange, the first thing they ask you, where do you hold your reserves? If you hold them in a small bank, they just won't even work with you. Obviously, it needs to be transparent and audited, widely distributed, multi-chain, deep liquidity. I mean, all of this is, I guess, obvious to us in the room. And so actually, that's what we did with the EURØP. So we got a French license, French MiCA license, last year, end of the year. The reserves we're actually holding at Société Générale, which is one of the top 20 global custodian banks. We're audited by KPMG. By now, we're listed basically on all major European exchanges, whether it's Kraken, Bitfavo, Bitstamp, Bitpanda, etc. We're on already on a few key chains, and we're adding more and more almost every month. But I think the really, really key part is payment infrastructure. So we do believe we have the best payment rails and integrations into fiat. There's a number of players now who are building so-called stablecoin payment orchestrators, where basically they take a different part of the payment value chain, custody, SWIFT connectivity, SEPA connectivity, credit card issuance, and just plug these different operators via APIs. We think this is a great temporary solution. It works until it doesn't, because it's fragile, right? If any part of that, you don't control the whole stack, the whole value chain. So what we're also building, and we'll be actually deploying in the next couple of months, is a full payment stack, fully controlled by us, including connectivity to direct connection to SEPA, direct connection to SWIFT, and direct relationship with the main card providers. And yeah, this is just a quick overview of the existing ecosystem. We keep adding new partners literally every week. So these are just some of our main partners. Obviously, if anyone is interested to work with us, I'm here, super happy to talk to you. And I guess with that, it's probably time for questions. Thank you very much.
How hard do you think is it going to be to offer DeFi products like swapping lending to the end user in Europe? Do you think it's hard?
Sorry,
from a regulation standpoint, is it hard to do?
It's actually not particularly hard, because the real issue is passing the interest from the reserve that you make on the reserves directly onto consumers just simply for holding. But actually, if you look at DeFi, the yield there is generated primarily not from the reserves, right? It's primarily from operations. There could be also some marketing support from chains, etc. So very short answer, legally, it's not really a problem. And in fact, we're going to be deploying our main DeFi product in a couple of weeks.
Okay, thank you.
Sure.
Hi, I'm Louis from Kaiko. Thank you for the talk today. Very interesting. I had a quick question. When you mentioned the CBDCs, some of the challenges were that it's on centralized rails, I believe was the wording, and I agree with you on this. But my question is, how do you think yourselves, and I'm also going to include other issuers like Tether or Circle, differentiate yourselves from a centralized model? Because I know, for example, Tether, they blacklisted a bunch of USDTs, and so there is still that centralization aspect, which I believe is somewhat important. But how do you differentiate yourself from that? Because you put it also in the challenges. So how are stablecoins different in that sense?
From CBDCs?
Yeah, well, just central, because you mentioned centralization aspect, which is a challenge. So what's the solution for this?
So for once, we're running it on permissionless blockchains, and obviously our very first one was Ethereum, and we still consider it our main chain. So I think that's one difference. Second one is that we are building this very wide ecosystem of partners around us, and also products, including on DeFi. This is going to be very hard to imagine European Central Bank doing, right? Because I kind of am struggling to think of business development managers at ECB, let alone BizDev developers for DeFi. So I think that's kind of like two examples of and we're not a state actor, right? So I think the chance that and any kind of need for us to snoop on our customers, it's probably much lower than with a state actor.
Thank you. So I'm Hazel. So I'm now working in the crypto podcast, payment podcast. So last week we just interviewed another bank in Luxembourg, and they also have their own euro stablecoin, EURØP. And also I used to work as a journalist back in China, so I deal with Chinese central banks and about the CBDC projects. I totally agree with you. I know from 2018 that they won't make it because of bureaucracy problem. So my question is, do you think a stablecoin is really good business? Because you look at the Circle's financial statements, you know that they need to share maybe 53%, 56% to Coinbase, to other channels to help to promote their own stablecoins. And for Euro stablecoins, I think maybe this is even harder because there are not enough the scenarios or channels for people to use that one, right? So do you feel that it will be very difficult for the stablecoin issuer or Euro stablecoin issuer to really promote your stablecoin, or you need to pay a lot of money, try to promote it on other channels? Yeah.
I mean, so you don't necessarily need to share your revenues forever, right? And actually, if anybody's doubting the profitability of stablecoins, look at Tether. And so definitely stablecoins can be a very profitable business. It is to a large extent kind of a game of large numbers. So once you actually start to have a very significant issuance, then the revenues are quite high, and you just make sure that you need to make sure early on that you don't lock yourself into forever partnerships where you indeed would have to give up a lot of revenue in the future. But where we actually think most of the money is going to come from, and it's already very apparent from what we're doing, even our own financials, it's not going to be from the interest income. It's going to be from the services that you're providing on top of that, particularly payments. And actually, we have customers, and we're actually now starting to scale some use cases, even in Europe, within Eurozone countries, where you actually have corporations very much willing to pay for financial services that we basically provide on top of the Euro stablecoin. So I think payments is actually an incredibly profitable business, even if you just take a few bips from each transaction. It's a game of very large numbers.
Very last question.
Hi, Christoph here. I have two related questions here. One is, how do you feel about EURØP, the initiative that's coming out in sort of European banks to make it really easy to make basically instant transfers without relying on American-owned payment processors like Visa, MasterCard, and such? And related question is like, how do you think the retail payment experience differs when it comes to EURØP and something like using Euro stablecoins, right? If there is a EURØP, is there a need for Euro stablecoins for retail payments?
Well, let me actually move us back 10 or 15 years. when all of these challenger neobanks were starting, right? And I've heard a number of large bank leaders saying, this is never going to work. They just have an internet interface. How can they compete with us, right? Like, there's no real technological, let alone financial advantage. And, you know, you move forward 10, 15 years, and you look at the really large, particular retail players, and you have the Revolut and 26. So I think this shows that large banks really struggle when it comes to technological innovation. There was a similar initiative, there still is ongoing similar initiative in the US. Didn't really pan out very well. And I think the problem with the bank-run stablecoin is that either you need to have every single bank on board, kind of like SWIFT, or if you don't, and if you have banks that have their own euro stablecoins, and there's already a couple of banks that have their own euro stablecoins, then the problem you run into is that at bank A, you will be very hesitant, actually will not want to use a euro stablecoin, which is issued by a bank B. So I simply do not believe that you'll be able to get all the banks, European banks, or basically overwhelming majority on a single shared kind of issued euro stablecoin. And I'm also a big skeptic, as you could have heard, about the ability of large banks, and particularly large consortia, to actually develop and be competitive in an extremely fast-moving industry, such as the stablecoins and crypto in general. Thank you.